I'm with someone that since morning every single person is talking about, and not and he is the founder and CEO of CMT. I'm not gonna tell you his name. I'll let him introduce himself.
Hello, my name is Tyler Wood. I am a CMT charter holder. Definitely not the founder of this beloved 55-year-old organization, but yes, last year I became the CEO and executive director. Yeah, thanks for having me.
Oh, thank you for being with us. And first of all, I have to tell you, I've truly, personally, from someone who has been in crypto, is a crypto guy, and barely met any like TradFi people. I really enjoyed it. The community here. Amazing. Well done, first of all. Okay, so and now one question, since I've been here in the morning, I've asked almost every single person, but it matters more and means more to hear from you. Sure. What is CMT and what does it mean to you? How would you describe CMT?
Absolutely. It stands for Chartered Market Technician, and it's a credential. It's respected by regulators and investment firms all over the world. If you're familiar with the CFA, the Chartered Financial Analyst, they're looking at financial statements of companies. They're looking for value, right? That was my upbringing and my MBA program, all about fundamental analysis. So if you think about trading or understanding behavior of markets, price action, statistics, a lot of math, then the CMT program represents all of those folks. The long, short hedge funds, systematic trading, CTA world, investment bank, not investment banking, institutional trading, wealth management, and the list goes on and on.
Tyler, you mentioned fundamental analysis.
Yeah.
Okay. And every single person just before you, they kept talking about technical analysis.
Of course.
So tell us about how it matters to the traders.
Yeah.
Okay. And what are the main differences and which one is more important in your own personal view?
Okay, here's how we explain it. Neither one is more important, and in fact, they're part of the same puzzle. So any chartered market technician, any CMT charter holder will tell you that prices trend for fundamental reasons. When you get out on longer time frames, prices rise because there is an underlying value creation. Over the shorter term, and the complexity of the market is that it's not just the fundamental picture, but also investors' reaction to changing fundamentals. So there is not perfect symmetry in information flow, but there's also not totally rational decision-making on the part of all world's investors. So when you factor in the growth and the value of a security, you name it, you have to put that to the power of behavior. So when we're in a raging bull market, whatever is happening in that fundamental side is amplified by human behavior, right? Greed, right? And on that's on the right side of the equation. All of that gives you price. Price distills all of the known and unknown fundamental information, and then it calculates all of that behavior, and it puts it into this wonderful little metric for us, this elegant, simplistic price. And price captures what people are willing to pay. Now, in a bear market, that the magnitude, the power of behavior is going to be less than 1, north of 0. So all that fundamental information is now deeply depressed. So even when the fundamentals are strong, when the story or the intrinsic value is rising, prices can remain very depressed. So our job, we think, is to react responsibly to all the information that the market is giving us. And we have this wonderful toolkit that helps us understand those things in the power of price.
Fantastic. Now, tell us about how CMT is actually helping the traders, especially the person who want to get a start with trading.
Yeah. So the first rule, people like Jay Woods, who's on our board of directors, would tell you, you've got 3 jobs: risk management, and risk management. Right? Most people get into trading because they're thinking only about the upside.
Yeah.
And you read books like Jack Schwager's Market Wizards. These incredibly accomplished traders and hedge fund managers, the reason they were able to remain so profitable is because they had capital preservation techniques. They care very much about their losers because they want to identify them and get out of those trades very quickly. So in the technical toolkit, we have all sorts of things, right? We can look at obvious price, trend patterns. That's kind of the old school methodology, pre-computing. Goes back to Charles H. Dow at the turn of the century, founder of the Wall Street Journal. Then you can move on from price and you could look at things like momentum or volume studies. We can look at things on a relative basis. So are equities outperforming things like bonds or commodities, right? We can look at relationships between securities. Then you can move on from all of that and you start to quantify the toolkit and you look at combinations of these tools that help us identify points of confluence or conflict. So what we're trying to do is put probabilities on our side to participate in the trend as long as possible and to get out when it's clearly ended, right? And now everybody's going to define their time frame differently. They're going to set risk tolerance very differently. That's a very personal thing. And what I've found over the last 25 years is that online you'll find a lot of people who can teach you how they trade. And that's a beautiful thing. Yeah. A lot of very successful traders are out there teaching people how they did it. But I think it's a deeply personal thing to find a system that works for you. So the CMT program, when people say, oh, I really want to learn how to trade crypto, is the CMT right? This is not a paint by number system. Instead, it's here are all of the colors of the rainbow, and here's some techniques, brush strokes, you name it. Go paint your own masterpiece. We're going to give you all of the ingredients, but not tell you that there's one way to do it.
Okay, great. You put it in the actually very nice way. You said it in a nice way because it's not like one recipe fits all.
Not at all. Impossible, right? And that's what makes a market. At this week's conference, we've had very large asset allocators, and their time frame might be 25 years, right? They're looking intergenerational in terms of their investments. We also have folks who have come off huge institutional trading desks, and they might only have a few minutes to cross a large block FX trade. They've got to make very fast decisions with large capital. Both of them use the technical toolkit. But if I was to say to the allocator and to the trading desk, this is the only way to do it, or you have to use this one tool, or this is the most important, of course that wouldn't work, right? It's like cooking Italian food and Mexican food. You can't come up with the one recipe for both meals.
True, yeah. Exactly. Great. So how big right now is the CMT Association? How big is it right now?
Thank you for asking. We've had a rich history, and we have been growing. When I got involved in 2011, there were a little over 1,000 charter holders. It was a very small club of New York and Boston, mostly, institutional folks. And what we saw after the great financial crisis was that institutional investors around the world realized they needed some other component to their toolkit. We also gained recognition from FINRA, which is a regulator in the US, right? It's governs all financial markets. And when they gave approval and blessing of the CMT program, and you saw the whole world start to pay attention to risk management, now we started to expand globally. And in 2014, I started working with our board of directors on opening our first office in Mumbai. We now have offices in Toronto and Mumbai, and my buddy Kaizad here is setting up our satellite office in Dubai. So right now, there are 4,600 CMT charter holders. Very small number. It's a very niche group at the moment, but there are 10,000 candidates in the program. So it'll triple over the next year and a half as those candidates complete their exams.
Wow, that is a great growth. And what plans actually do you have for your future to grow furthermore?
So we spend a lot of time on the CMT curriculum and on the examination process. And I'll try not to bore you, right? People don't love hearing about high stakes testing, but
true.
These are the important parts. We start, every few years, we do a practice analysis. So we go out to the industry, we talk to banks, investment firms, exchanges about the knowledge, skills, and abilities that they're looking for in their next hire. From there, we decide the knowledge domains in technical analysis, in our field, what is most important to the industry. That helps us create the learning objectives, that then helps us write the curriculum. From the curriculum, then we're creating exams. So it's 3 levels. You do pass them in order. They build on each other. So the level 1 exam is very approachable. It's a multiple choice exam. It's 2 hours. And all we're looking for there is basic recognition and definition. Do you understand breadth and volume and price trends and momentum and all the rest? You move on to level 2, and it starts to ask you, all right, the combinations of these types of indicators. From a trend, what is volume and momentum telling us to confirm or deny? Where do you find exhaustion of trends versus acceleration of trends? So a little more application. It's a 4-hour exam, and it's a little more reading. You get into level 3, and we're actually asking you to take the position of a position trader. So you get a bunch of market data. And the first question is, are you bullish or bearish here, right? Define your position, and then why. So it's a constructed response exam. You don't need to write long essays. It could be just bullet points. But we do that through test centers all over the world. We work with Prometric, and it's actually been growing really quickly, I think in part because the industry has recognized they're looking for people who not only understand market structure, but also behavior and psychology, not just for themselves, but also how the market operates. So we cover a lot of behavioral finance, a lot of quantitative methodologies, and of course, we're always focused on risk management.
Risk management. Well, when you were talking about risk management and like every person should have their own strategy of trading.
Yes.
Well, I'm not a trader. Okay, but I used to trade, and I had one method. I will not advise it to any single person out there.
Okay.
I used to call it a bulldozer method.
Bulldozer.
Yeah.
Okay.
So I used to take a position, no stop loss, no take profit. So I don't advise it, and most of the times I used to get liquidated.
Yeah.
Yes. So
And your time horizon, you're holding forever, just like diamond hands?
no, not diamond hands. The period of time that I'm talking about, that I'll mention right now, is during the COVID.
Okay.
Sitting at home, nothing major to do physically. So I was sitting at home with my few of my friends that they knew actually how to trade.
Okay.
So I was like copy trading from their hands, whatever they were doing. But my difference was that I was not putting any stop losses.
Yeah.
Okay. And I was either getting liquidated or getting like 2x, 3x, and then closing my position. So,
Sure.
But yeah, there was no risk management in it.
Yeah.
So this is something which I'm sure so many people can benefit from learning from CMT.
Yeah, I think, what we heard throughout the conference, day after day, was the idea that you need a disciplined, repeatable process. We're all human beings. So when you have fractures in the market or you have these serious volatility events, what's going to happen to you emotionally is pure panic.
Yeah.
And one of our past presidents, a beloved fellow named David Keller, is a pilot. And he said when he was getting his pilot's license, he'd go up in the little aircraft, little 6-passenger, and the flight instructor would say, "Okay, Dave, let's cut the engines, put it into a nosedive, and then we'll work on recovery." Now you spend all this time on the ground, like an annoying amount of time, going through the checklist before you ever get up in the air. And Dave was explaining that when you cut the engines and the plane noses down, and you realize you are in a tin can plummeting towards the earth, that little checklist that you go through, right? And you have to do it in order, and you have to remain calm and disciplined and follow that checklist in order to correct the problem. Okay, same thing for trading. If you don't have an advanced plan, your discipline, your rules, price breaks shorter term moving average. Shorter term moving average breaks a longer term moving average. These are very, very simple tools. But if you don't have that set up in advance, then how would you know that it's the time to get out? Yeah. Right?
Sure.
And I think as investors, it's been proven in all of the behavioral finance books, they call it prospect theory. Mm-hmm. We suffer much more pain from recognizing a loss than we do experience joy from a gain. So how does that translate to trading? Well, we're very eager to lock in profitable trades, right? Well, let's just keep that in the portfolio. And a losing trade, what do we want to do? I'm sure it'll come back. I have strong conviction for X, Y, Z. I follow so-and-so guru, or I've been, watching these Twitter accounts, and it's definitely going to rally again. Maybe, but if you have a disciplined checklist and it broke the levels that you set before, it doesn't have to be a stop loss order. It can be just your set of rules. You got to follow those. You can always buy back into something, right? But holding it on the way down, like that, it just becomes more and more painful until you finally capitulate, and that's usually at the bottom, right? That's when most folks sell, and so that's the time of most opportunity, right? Where you should be loading up, but you've just lost everything on the way down.
Okay, fantastic. One question just hit my mind. The members that you have right now at the CMT. Are there majority of them like these individual retail traders, or no, from the institutional side? Which one is more? And
So amongst the global membership, it is strictly professional and institutional.
Oh, okay.
Which is not to say that the education is excluded from anybody who would like to learn. So the curriculum is accessible right through the website. If you want to sit the exams, you're welcome to. To become a chartered market technician, because we are regulated by FINRA and several other regulators around the world, you do have to work in a professional capacity for 3 years if you've passed the exam, or 5 years if you're not taking the exams, to become a professional member of the association. So the education is open to all, and there are a ton of free resources on our website. If I may, anybody who's listening to this, content, CONTENT, .cmtassociation.org is just chock-a-block full of research papers and videos and our podcasts, and it's all available for free. So anybody who wants to learn these things, it's a very generous community. But for those who want to go through the CMT program, it's really designed as a career advancement tool. It's going to give you a structured approach to learning this discipline, but also it's recognized by employers and regulators around the world. So we just had a few fund managers who are 100% crypto. They utilize technical analysis to have a rotational strategy between Bitcoin and the altcoins. They look at some seasonal rotation, and they use technical factors to know when to tilt the portfolio into the altcoin space or back to what is the safe large cap asset within the crypto space. It's fascinating stuff.
Great. Talking about, before getting to the next question, I just realized that I want to tell everyone that it doesn't matter if you're institutional level trader or just some person, let's say like me, that was interested in trading. So we can benefit from CMT, and in the long run, we can benefit both personally and also in the career-wise.
100%. Everyone is welcome under this tent.
Amazing, amazing, fantastic. Now, to my next question, you just mentioned crypto a couple of times, and I've been waiting to ask you this. What is your view? How do you see the crypto market? Or let me ask you like this. How do you feel towards the crypto market from someone's perspective of someone who is coming from TradFi?
Yeah. So when I finished my MBA program, I thought financial statement analysis, fundamentals, that was the only way to successfully invest. And I think it is a prominent component. But I'll use a TradFi analogy first, which is semiconductors doing very well in this AI arms race. Do I know the first thing about semiconductor chip manufacturing? Do I know the percentage of silver inputs and where their supply chains are? Do I have access to the management team at companies like NVIDIA? Absolutely not. So I have no asymmetrical information on the fundamentals. Now, as an investor, can I invest in semiconductors without fully understanding everything about those chip manufacturers? Absolutely, because all of that fundamental information is derived into price. Now, I can invest in semiconductors. I can invest in Taiwanese semiconductor manufacturers. Do I have access to the Taiwanese? Do I understand the regulatory environment, the threat from China? There's such a four-dimensional chess with all that information. So, with respect to the cryptocurrency market and to distributed ledger technology, I think the technology is incredible. But do I understand the intrinsic value of the coin itself? Absolutely not. At this conference today, I developed a whole new vocabulary. I filled a notebook and a half with a ton of information about not just the on-chain analytics, but the seasonality and the environments that we might be trading through right now. Can I be an informed investor in the cryptocurrency markets without knowing that they might completely replace the financial services industry or they might go to zero? Absolutely. And the confidence of investors who can participate in something that could be a bubble has to come from a place where you don't know the future, but you can react responsibly, meaning you have a defined risk management approach. So, am I an owner? Absolutely. Do I participate? Absolutely. Do I know where the hell it's going? Absolutely not. And anybody who tells you they know exactly, what this is going to look like by 2040 or 2050, I think it could be a little bit of smoke and mirrors. Maybe they have something that I haven't found yet, a crystal ball, perhaps. But I think for me, it's having a set of tools that allow me to navigate a space that I might not know all the intricacies, but I can still protect capital when necessary.
Okay. Now, if someone right now from CMT who's been into TradFi comes to you and tells you, okay, I want to enter the crypto market as well, okay, in parallel with the TradFi, what piece of advice would you give them?
We talked a lot about the macro landscape at this week's conference. There's certainly a de-dollarization trend happening. So when you look at fiat currencies and you look at central bank intervention, my government in the United States of America shut down.
Yeah, it's the second day right now.
It's the second day. We're not going to get non-farm payrolls tomorrow because the government's
Yeah.
not cutting any checks. There are events happening now that haven't happened for a very long time, not just in the US, but all around the world. So what were traditional correlations between government treasuries and the fiat currencies behind them? Or traditional correlations between those rates and FX and the equity markets around the world? They're changing. Now, at a time of a lot of uncertainty on the macro environment, people making big calls or thinking that they've totally figured it out and they know exactly what path we're on, I think it's troubling when they answer with certainty. I don't know if you remember, but in 2021, there was 100% agreement, 2022, 100% agreement amongst economists in the US that recession was absolutely on the horizon. We had 100% probability of having an economic recession in that next year.
Yeah.
And we haven't had one yet.
No.
So, for TradFi investors that are looking to have an inflation hedge, for a while the cryptocurrency space behaved just like smaller cap tech. Moved very fast. It moved very closely with the information technology sector, if you look at those charts. I think what's happening right now, obviously with gold above 3,600, we're seeing central banks loosen their grip or reliance on single fiat currencies. They're looking for alternatives. I think crypto has a tremendous role to play in that, if that's the way it goes, or not, right? If they're comfortable holding gold bullion, great. If they would prefer something that's a little more transparent and fungible and movable, then I think there are some great alternatives in the cryptocurrency space, and that would certainly be a tailwind to the entire crypto asset space. For TradFi, I think there is a tremendous amount of interest. There's also the folks who are equipped with good risk management are willing to take the plunge. Those who are not are pretty skittish, right? If you're a buy and hold investor, how do you know you can buy and hold crypto and that it's never going to go to zero? That's pretty hard to guarantee.
Okay, great. I always love to hear different people's opinion, actually, especially someone like you, an expert opinion who's been into different markets about crypto and new emerging technology and emerging markets like crypto. Exactly, said. I will always enjoy that, honestly. And I would like to ask you one question. I guess that you have heard about tokenization, right?
100%, yes.
Okay, so how do you feel about that? Because crypto, it's not only going to affect directly crypto, it's the technology side of it with the blockchain.
Yeah.
They're going to tokenize different assets, real-world assets, even especially stocks.
Yes.
How do you feel about that?
So at a very personal level, the idea that U.S. equities markets are open from 9:30 to 4 o'clock every day is it's kind of a nice warm blanket that you know when the chaos will start and that it has an endpoint. So tokenizing stocks means that we are trading 24/5, maybe eventually 24/7. Do I think the world needs more opportunity for more data and more trading? I don't know that provides anything additional, right? There's tremendous value in tokenizing all sorts of things that remove bureaucracy, red tape, or asymmetrical application of regulation, right? So you think about farmland, or you think about, when we get a mortgage on a house in the United States, it can take anywhere from 3 weeks to 6 months to get the closing. Well, if I want to sell you my house and it's on the blockchain and you and I agree on a price, then it's done. Instant. And we don't need to worry about lawyers and governments and that's a beautiful thing, right? And particularly for those countries like El Salvador or you name it, where they're not advantaged by the current system. So why would we try to, create the inertia that keeps us from changing things? I think there are a lot of spots in the world where there are vested interests to resist change. I don't have a prediction on where that's all going, but for right now, I like the idea of sleeping at night and then working during the day. But if the laws change and we got to work 24 hours, so be it. We'll just we'll get a few more Red Bulls.
Good one, good, very good one. Thank you so much, Tyler. Thank you.
MJ.
And before we end, what message do you have for our viewers?
Oh my gosh.
Yeah.
The best investment you can make is in yourself. Anytime you can, give some time to learning something new. I just sat for the last 3 days listening to the smartest folks on the planet on a discipline that I think I've been studying pretty rigorously for about 16 years. Notebooks full. I've got a ton of things I got to go research when I get home. Lots of new ideas, and I think that's why people come together at these conferences. I think that's why people sign up for something like the Chartered Market Technician program, and I think it's the best investment you can make. So get back to the books and start learning, and we'll see you next time.
Fantastic. Tyler, it was an absolute pleasure having you, talking to you. So insightful. Thank you so much.
you
We wish
so
you
much,
all the
MJ.
best.
Thank you, MJ.
Thank
See
you,
you.
guys.